Bitcoin just fell below $65,000, and the fear and greed index hit a reading of 5. Let me say that again, 5. That is the lowest reading in the entire history of this index, lower than the FTX collapse, lower than the COVID crash, lower than anything we have ever seen. And while every retail investor on the planet is screaming bear market, I found something in the on-chain data that completely contradicts what you are being told. Whales, and I am talking about wallets holding between 1,000 and 100,000 Bitcoin, just accumulated over 70,000 Bitcoin worth approximately $4.6 billion in a matter of days, and I am going to show you exactly what happened every single time this exact pattern appeared in Bitcoin's history. Spoiler, it was not a crash that followed. If you are serious about understanding what is really happening in this market beyond the fear and beyond the headlines, subscribe to this channel right now. I break down the data and the institutional moves that most channels refuse to touch, because the truth is not always what gets clicks, but it is what makes you money. Let me set the stage for you, because context matters here. Bitcoin is trading around $63,000 today. We are down roughly 50% from the all-time high of 126,000 that we hit back in October of 2025. Spot Bitcoin ETFs have bled approximately $4.5 billion in outflows so far in 2026. BlackRock's IBIT alone has shed over $2.1 billion in the past 5 weeks. The weekly RSI on Bitcoin is sitting at levels we have not seen since the absolute depths of prior bear markets. And on top of all of that, we just had the Supreme Court strike down Trump's tariffs under the International Emergency Economic Powers Act in a 6-3 ruling. Trump immediately pivoted, slapping 10% tariffs globally under Section 122 of the Trade Act of 1974, then raised them to 15% within 48 hours. Markets hated it. Bitcoin dropped 5% on Monday alone. Every headline you read right now says bear market. Every YouTube thumbnail is blood red. Every comment section is filled with people telling you to sell everything and hide. And here is where it gets interesting. Because while you were reading those headlines, while the fear and greed index was printing the lowest number in its entire existence, the largest wallets on the Bitcoin network were doing the exact opposite of what retail was doing. Let me walk you through the data, because this is not opinion. This is on-chain fact. On February 6, 2026, the single day that Bitcoin crashed below $61,000 and saw over $2.5 billion in liquidations across the crypto market, CryptoQuant recorded 66,940 Bitcoin moving into accumulation wallets. That is the largest single-day whale accumulation event since 2022. Let me put that in perspective for you. 66,940 Bitcoin at roughly $67,000 per coin is approximately $4.5 billion in a single day. These are not retail traders panic buying on their phone. These are entities with the capital, the infrastructure, and the conviction to deploy billions while everyone else is running for the exits. And it did not stop there. Glassnode confirmed that wallets holding more than 1,000 Bitcoin accumulated approximately 53,000 additional coins over the following 2 weeks. That is another $4 billion in fresh exposure. Sentiment tracked addresses holding 10,000 to 100,000 Bitcoin accumulating over 70,000 coins total in early February alone. The Glassnode accumulation trend score climbed to 0.68, which indicates coordinated buying across multiple wallet cohorts. This is not one whale making a bet. This is a systematic accumulation event across the entire spectrum of large holders. Now, here is the part that should make every single person watching this sit up and pay attention. I went back through the data and looked at every time in Bitcoin's history where we had 3 conditions present simultaneously. Number 1, the fear and greed index at extreme fear below 10. Number 2, whale accumulation accelerating. And number 3, retail investors capitulating and selling into the panic. Do you want to know what happened every single time? Let me take you through it. November 2022, FTX had just collapsed. Bitcoin crashed to $16,000. The fear and greed index hit 6. Whale wallets were accumulating aggressively at those levels. Retail was liquidating positions across every exchange. Within 90 days, Bitcoin had recovered to 25,000. Within 12 months, it was racing toward new all-time highs above 73,000. March 2020, the COVID crash. Bitcoin fell from 10,000 to 3,800 in a single day. Extreme fear dominated every metric. Whales accumulated, retail sold. Within 6 months, Bitcoin was above 12,000. Within a year, it hit 64,000. Now here we are. In February 2026, Bitcoin crashed from 126,000 to 60,000. The Fear and Greed Index printed 5, the lowest ever recorded. Whales accumulated 70,000 Bitcoin in days. Retail is selling at a pace not seen since the FTX collapse. The SOPR, which is the spent output profit ratio, has been hovering at or below 1.0 since mid-January, meaning sellers are realizing losses. That is the textbook definition of capitulation. If this is opening your eyes to what is really happening beneath the surface, hit that like button right now, because this data needs to be seen by every Bitcoin holder who is sitting in fear right now. Now I want to address something that a lot of channels are getting wrong about the ETF outflows. Well, yes, Bitcoin ETFs have seen 4.5 billion in outflows in 2026. Yes, BlackRock's IBIT alone lost 2.1 billion over 5 weeks. But here is what they are not telling you. As of February 10th, IBIT still holds 54.12 billion in assets under management. That represents approximately 786,300 Bitcoin in custody. The cumulative net inflows into spot Bitcoin ETFs since launch are still around $53 to $54 billion. Total ETF assets under management sit near 85 billion, representing roughly 6.3% of Bitcoin's entire market capitalization. That is several times larger than the $5 to $15 billion that even the most bullish projections anticipated when these products launched. And here is the kicker. Just yesterday, On-Chain Tracker, the data nerd, reported that BlackRock withdrew 2,086 Bitcoin worth $135 million Coinbase and moved them directly into their IB ETF addresses. They also moved 8,459 Ethereum worth 15.8 million. This was not a sell. This was not a redemption. This was BlackRock moving crypto back into their ETF custody structure. After weeks of heavy selling pressure across the entire ETF complex, BlackRock just shifted $150 million back into accumulation mode. Are you paying attention? Because Wall Street is telling you one thing with their headlines and doing something completely different with their wallets. Tell me in the comments right now, how much Bitcoin do you hold? Are you still accumulating at these prices, or are you waiting for lower? I want to know where you stand, because I am reading every single comment. Let me connect this to the macro picture, because none of this exists in a vacuum. The Supreme Court just handed Trump a massive defeat on his tariff agenda. The 6-3 ruling said the International Emergency Economic Powers Act does not authorize the president to impose tariffs. Trump's response was immediate. Within 4 hours, he signed an executive order imposing 10% tariffs globally under Section 122 of the Trade Act of 1974. Then he raised it to 15%. Those tariffs took effect on Tuesday. But here is the critical detail that most crypto analysts are missing. Section 122 tariffs expire after 150 days unless Congress approves an extension. 150 days puts us at the end of July. That is right before the midterm elections. And according to Polymarket, there is a significant probability that Republicans lose both houses of Congress. If that happens, Trump becomes what one analyst called a toothless tiger. No tariff extension, no stimulus checks funded by tariff revenue, no massive tax cuts. The entire economic agenda stalls. Now, what does this mean for Bitcoin? In the short term, more volatility, tariff uncertainty drives risk-off behavior across all markets. Bitcoin fell 5% on Monday when the new tariffs were announced. But in the medium term, this creates an incredibly interesting setup. If the tariff revenue disappears, and the US economy weakens further, the pressure on the Federal Reserve to cut rates becomes overwhelming. The labor market is already weak. Non-farm payroll data showed only 115 to 180,000 jobs created in all of 2025 after massive downward revisions. GDP in the fourth quarter came in at 1.4% versus the expected 2.8%. PCE inflation is ticking higher again, with Trueflation showing 1.07% and rising. The consumer is stretched to the breaking point, with credit card debt at record highs and housing completely unaffordable. This is the setup where Bitcoin historically thrives. Weakening economy, pressure for rate cuts, dollar weakness, gold already at $5,080 an ounce, up 61% over the past year. When liquidity returns, and it will return because the alternative is a full economic collapse that no politician wants on their record, Bitcoin is positioned as the hardest asset in the room. Do you think Bitcoin hits $100,000 again before the end of 2026? Comment yes or no below. I am reading every single one and I want to see where the conviction level is right now. Let me talk about the exchange whale ratio, because this metric tells a story that cuts both ways, and I want to be honest with you about it. CryptoQuant reported on February 20th that the exchange whale ratio climbed to 0.64. That is the highest reading since October 2015. It means the top 10 deposits by volume now account for roughly 2/3 of all exchange-bound Bitcoin transfers. Average deposit sizes swelled to 1.58 Bitcoin per transaction, a level last seen during the depths of the 2022 bear market. Now, a lot of people will look at this and say whales are preparing to dump. And yes, some whales are depositing Bitcoin onto exchanges, which can signal selling pressure. Daily inflows spiked to approximately 60,000 Bitcoin on February 6th, before moderating to a 7-day average of around 23,000. But here is what the surface level reading misses. Not all exchange deposits are sells. Whales move funds to exchanges for multiple reasons: derivatives positioning, lending, liquidity management, collateral for margin, and critically, Wells Fargo, JP Morgan, and BNY Mellon have now fully operationalized their lending desks to support Bitcoin-backed credit facilities. Wells Fargo permits the use of Bitcoin ETF shares as eligible collateral for dollar credit lines. This means whales can deposit Bitcoin, borrow against it, and never sell a single Satoshi. The whale accumulation data and the exchange deposit data are not contradictory. They are two sides of the same coin. Large holders are building positions through accumulation wallets, while simultaneously using exchanges for sophisticated financial operations. This is not 2017 retail mania. This is institutional-grade capital allocation. And speaking of institutions, let me tell you about the most fascinating story that nobody is talking about. A mysterious Hong Kong-based entity called L'Aurore Limited filed a position of approximately $436 million in BlackRock's IBIT. This was their first and only SEC filing. No operating history, no diversified portfolio, no website, one ETF, one position, sole voting control over what amounts to roughly 4,900 to 5,000 Bitcoin of synthetic exposure. Hong Kong company registry filings show the IBIT stake is linked through a director named Zheng Hui, a mainland China passport holder, who is also the sole director of another company wholly owned by a British Virgin Islands entity. When CoinDesk tracked them down, the spokesperson said the owner prefers to keep a low profile and that the position simply reflects personal investment conviction. Think about that for a second. Someone routed $436 million through an opaque offshore structure into a US-listed Bitcoin ETF at these prices. That is not the behavior of someone who thinks Bitcoin is going to zero. That is the behavior of someone who sees generational value and wants in before the rest of the world catches on. Like this video, if you are still bullish on Bitcoin despite what every headline is telling you, let us see how many of us are still standing. Now I want to give you my honest framework for what happens next, because I am not going to sugarcoat anything. The data is telling me two things simultaneously. The short-term risk is real Bitcoin could still test the high 50,000s. The exchange whale ratio, the tariff uncertainty, the ETF outflows, and the weak macro data all suggest we could see one more flush lower. If Bitcoin loses $60,000 convincingly, the next major support sits around 55 to 57,000. Leveraged longs positioned just below 60,000 would get liquidated, creating a cascading effect that could push prices down quickly. But here is the thing, even if that happens, the medium-term setup is the most bullish I have seen since the FTX bottom. Let me explain why. The RSI on the weekly chart is at levels below the 2022 bear market bottom. Every time the RSI has reached these levels, Bitcoin was within weeks of a significant reversal. The fear and greed index at 5 is unprecedented. In every prior instance of extreme fear below 10, Bitcoin rallied within 90 days. Whales have accumulated over 70,000 Bitcoin worth $4.6 billion at these exact prices. BlackRock just moved $135 million back into IBIT accumulation after weeks of selling. The SOPR below 1 indicates capitulation, which historically marks the transfer of coins from weak hands to strong hands. Exchange balances continue to decline as Bitcoin moves to cold storage. Mining hash rate hit record levels throughout 2025, surpassing 1 zettahash per second, reinforcing network security and scarcity dynamics. And there is one more thing. There will only ever be 21 million Bitcoin. That is not a marketing slogan. It is a mathematical certainty embedded in code that no government, no institution, and no court ruling can change. Right now, the price of Bitcoin is being determined by fear, by tariff headlines, by macro uncertainty. But the supply is fixed, and the largest, most sophisticated capital allocators on the planet are using this fear to accumulate at a pace we have not seen in years. I look at this data, and I see the exact same pattern that preceded every major Bitcoin rally of the past decade. Extreme fear, whale accumulation, retail capitulation, institutional infrastructure expanding. The question is not whether Bitcoin recovers. The question is whether you are positioned when it does. Is this the bottom, or do we go lower first? Give me your argument in the comments below. I want to hear both sides because this is where real conviction is forged. Let me be very clear about something. This is not financial advice. I am sharing what the data is telling me and what I am personally watching. Every person's situation is different. If you are over-leveraged and cannot afford to hold through another 10 to 15% drawdown, that is a decision only you can make based on your circumstances. But if you are a long-term holder with a time horizon measured in years, not weeks, the on-chain data is screaming one thing. Smart money is not selling. Smart money is accumulating. And in every previous cycle, the people who bought when the fear and greed index was in single digits were the ones who built generational wealth. The range I am watching is this. On the downside, 55 to 57,000 is the max pain scenario if 60,000 breaks. On the upside, the first target for any relief rally is 69 to 73,000, which is where the previous cycle high and the major moving averages converge. If Bitcoin clears 73,000 with conviction, the CME gaps and retracement levels open up a path toward 85 to 97,000. And I know this sounds aggressive given where we are right now, but I have not closed the book on this cycle, producing one more surprise to the upside. The absence of a proper altcoin season, the unprecedented RSI readings, the institutional accumulation at scale. These are not characteristics of a cycle that has fully played out. Something does not add up. And when the data conflicts with the narrative, I trust the data. Share this video with one other Bitcoin holder who needs to see what the whale data is actually showing. Because right now, fear is making people sell the bottom. And the data says the smart money is on the other side of that trade. And make sure you subscribe and hit the notification bell, because when this market moves, it moves fast, and you do not want to be the last one to know what the data is saying. I will see you in the next one.